Good evening, everybody. Welcome to this week's market strategy session. It is Sunday, March 1st, 2015. Want to bring your attention to this that's on the screen currently. This week, the strategy session is sponsored by this link, paulandsaul.com likes/4vids. What it is it's 4 videos for market experts for their best setups for February and beyond. I know it's a little late since it's already March, but doesn't mean that they're not still valid. There is no credit card required. The only thing is an email. At the end of the video, each of the presenters does offer something if you would like to continue with them, but that's totally up to you. And Paul and I do not get compensated for anything you buy from them or any of that stuff, just as full disclosure. Okay, what we're trying to do is we're trying to get the word out a bit for the Sunday night strategy sessions to get a nice big group here. And not that we don't love everybody who already comes, and we get a lot of people that watch it on the replay, a ton of people, twice to 3 times as many that show up. We're getting a few hundred people watching it on the replay. So we just like to we're spreading the word. So we're doing a little bit of, a little bit of reciprocal stuff back and forth. Sam, there is a sales, they do talk about what they offer, but it's not a sales pitch. It's information. And at the end, they talk about, what they do if you want to subscribe to them or something like that. But like I said, we don't get compensated in any way for that. We're just trying to spread the word of the Sunday night strategy session. So we're bringing on some sponsors. So if you'd like to help us out, you want to keep the strategy sessions going and nice and free and all that stuff, go to webinar, cost some money, and obviously our time, which we don't charge for, but that's fine. I'd appreciate it if you go to this link and sign up and watch the videos. It's also good content. So it's not garbage content by these guys. All right, so go to the link, sign up. I want to thank everybody that sent in feedback and testimonials. Got a lot of good stuff, and we're going to be changing the format around a little bit. Some really good recommendations. You could still get in your feedback testimonials. Again, we're running a contest for one-on-one coaching with me. There'll be 2 winners, so you get 1 entry for your feedback. You get an extra 3 entries for picture, and you get an extra 6 entries for a video. So you can get up to 10 entries. All right, and send the feedback to Winning Edge Trader. Well, support at winningedgetrader.com. Just to let you know, Paul will be writing an article for an ebook. We'll be talking about that. That'll have a bunch of traders giving their best stuff in it, short little blurbs about their best stuff. Paul, that'll be coming out at the end of March, so that's going to be interesting. And the ebook will be free, so you'll be able to grab it. I'll get the link to that as well. And we are going to be launching the newsletter. Now it's at a do or die thing because this ebook will be distributed to, 100,000 people, whatever it is. So we want to have, besides the Sunday night strategy session, we also want to have something where people can get more from us. So we'll have a newsletter coming out shortly, and we'll be beta testing it for those that want to get it and give us feedback on it and tell us how we can make it better. All right? So that's really all I have for today. Paul is actually doing the second part of the session tonight. Usually he starts off and I pick it up, but he is actually going to be here. He hopes to be here by 8:30. And so until then, we're gonna do this in reverse today, and I'm gonna take your stock, futures, currencies, whatever you want me to go over, I will go over. One stock that I have that I want to show you is a stock called VRX. And VRX, I drew a line in there, but It's a really nice gap and consolidation here. These are the types of setups that I'll be talking about in my workshop that's coming up, that you're looking for continuation moves. So VRX is right around 200. I wouldn't be jumping in here blind, but I would absolutely be watching this for signs of continuation to the upside. Still coming in at a nice multiple of the 50-day average volume here. So it's acting really well. Obviously, this spike is probably the biggest volume ever for the stock. All right. So this is one to definitely keep on your radar. So Bill asks, what is the latest in my TA investigation? Well, I've been doing a lot of work with patterns and reading what some experts have been saying about it, and basically a lot of people have been telling me that despite the market moving higher like it has been for several couple years, and that are, especially even last year, they're struggling to get alpha. They're struggling to beat the market, and some are struggling to even keep up with the market. I don't know if you have the same concerns, if the people here have the same concerns or the same issues, but it seems to not be as easy as it is on paper, and it never is. It's when you decide that you want to throw everything into the S&P 500 index that it decides to limp, and when you don't and try to beat the S&P 500, you would have made more money just putting it into the S&P 500 index. So the goal is to come up with a quantifiable scientific type of trading system, right? And, don't get scared with scientific, because all that word really means, at least to me, is that, you follow a set process every single time. Okay, so it's, that's pretty important to have. It's pretty important. I like to always say, if you want arbitrary results, take arbitrary trades. If you want consistent results, take consistent trades. And the only way that you get that consistent trade is if you follow a scientific regimen, or whatever the word is, a scientific process in which you just, follow this. And it also makes it really, makes it much simpler, and it tends to cage emotion. Those of you who have been around long enough, and most of you have, know that my saying is you can never take emotion out of the market, because you can. It has to do with money. But you want to cage it. You want to, not control it, but you want to at least put boundaries on it. And by having a scientific strategy, it kind of does that for you. So real quick, I'm going to get to the stocks real quick. You guys can keep pushing them if you want. I went over earnings, and there really isn't anything important. I don't see anything. I went over them while I was waiting for you guys to, waiting for 8 o'clock to come. Now, the economic reports, Monday you got ISM at 10 o'clock. Tuesday you got Spanish unemployment's real early, our time. Yellen speaks at 8:15 at night. So maybe that'll have a little influence on Wednesday. I don't know. You got ADP non-farm employment on Wednesday. You got ISM non-manufacturing at 10. And then, of course, you have the ECB press conference, the minimum bid rate, and the unemployment claims in the States. So you got the European rate decision and the United States unemployment claims. They're weekly. Williams speaks at 10 o'clock, and then Friday are the job numbers. My opinion, I expect the S&P 500, unless we get cracked early on, and even if we do, I'm expecting us to be at that spike high of 212.97 by the time the job numbers come out. Okay, I expect us to be up at this spike high by then at least. Okay? So that's what I'm looking at. All right, I think the market is ratcheting higher. It's grinding higher. I do believe a pullback is coming. I don't think it happens until we get to 212.97. and I don't think we have a chance for a real serious pullback, as in the bear market that everybody's calling for, because they just refuse to just believe the charts for some reason, until the NASDAQ, also known as the QQQ, reaches an all-time high, which I think will happen this year. That is my big and bold and only longer-term prediction. On another note, I went to the gym 3 days this week, Thursday, Friday, and Saturday. I was going to go today, but I'm figuring I'm going to do 3 on, 1 off. So I'll be back. I'll probably go all next week, because I love the weekdays are so much better for me to go. But and I'm trying my best to give up dairy, specifically ice cream, which I've been fiending on since I hurt my back. But unfortunately, the cookies are still calling me there. That's it. And do it like dialysis every other day, 3 times a week. Thanks, Scott. It's nice. It's definitely what I want to picture myself doing. I will tell you, though, I the other day I went, and you can see the progress day after day. You know, you go from one day to the next, and all of a sudden you're like, hey, this is a little bit easier. And Saturday was my best day of the week, and it was my 3rd day. You know, but you know, I'm doing okay. I'm walking the treadmill. I'm not up to where I was before I got hurt, but I'll be there eventually. So I'm not, which one, Scott? Which group? So I'm not giving it up yet, and I'm, trying to get myself trim and slender, but it's all in the eating. It's all in the eating. I got the vertical gastric sleeve back in May, I'm sorry, and I figured out how to cheat it. There's a reason why a lot of my friends told me to get the Roux and Y and not the vertical gastric sleeve. Yeah, I got to do that, Doc. I definitely got to do that. Anyway, I'm just stalling here until I get enough stocks to go, and that's it. But it's all the food. Food is the key to the weight loss. Food is the key to the weight loss. That's my opinion. I got to just keep my mouth shut. But I've found ways to cheat it. I get a sandwich, and all right, I can't eat it all, but I could just wait a half hour and eat the rest. I'm just not really doing as good as I should. But I loaded up on some vegetables this weekend, so I'm going to be making them during the week and kicking some butt there. All right, anyway. Adrenal. I don't know what the heck it is, Scott. What does it do to you? All right, we're going to go. All right, no more stocks, please. Let me get through these, and then if we have time, I'll get more, okay? So no more. No more, thank you. All right, that's my you'll hear my kids in the background. Unfortunately, the door's closed, but I'm not going to be able to keep them out of it completely. So this GDXJ, they're taking showers. It's always like a scene here when they're taking showers. It's GDXJ. I like this pattern here. Bullish or bearish, I don't have a big opinion because it is under the 200-day moving average, but it is above the short-term moving averages. You really have to wait on this one. You have to wait to see which way it breaks. The doji on Friday does tell me that it could be ready to go, but if it doesn't and instead it rotates down, what you may have is something like this where it comes down to here and then it dives down. I don't know, but just as easily could go up here. I love these types of patterns because it's at a decision point. All right, let's look at, sorry about that. KSS, it's overbought. It's a monster. I think it's going higher, but it needs a rest. Oh, that's no good, Scott. I don't want that to happen. Track, it's just way too sloppy. I have just no opinion on this. I couldn't even tell you. I don't see any setup here at all on track. XLE, 50-day moving average. If that gives way, then maybe it could get a deeper pullback. But right now, it doesn't look terrible here. It doesn't look terrible here. CRE, got to get over that 200-day. So until it gets... CRE is consolidating right under the 200-day moving average here. So, again, you got to watch to see if it gets through or not. FXI, yeah, it looks strong. I mean, it looks like it could go. I mean, it's a little sloppy, obviously, because it's pretty gappy, but it looks pretty good, right? Again, overboard on the short term, but it looks okay. Apple, yeah, pulling back, but looks very nice still. It's the biggest company in the world, by the way, now. Well, it's been the biggest company for a while, but it tips $7 billion. It's funny because the closest competitor, anybody know what the closest competitor to Apple is as far as size, value? Anybody? Anyway, yeah, Exxon is correct. 380 something million, a billion, million. I have million. That's what they spend on freaking the commissary or whatever. So Apple looks okay. It's definitely overbought, but I think Apple is very, very, very strong. It's the largest actually in the United States. I didn't look if it's the largest worldwide, but I think it is also. Anyway, Apple looks like it's in a bull flag. Looks like it's going to go higher. Facebook is just consolidating. I don't really have an opinion here. I mean, it really has to break out of the top up here to get interested in it. GoPro. Okay, I'm not typing in my thing. That's why. GoPro. Yeah, it looks lower. GoPro continues to look lower. You got support right here. And if it gives way down here at 36, then it could be going to an all-time low for it. Twitter. Yeah, I mean, Twitter's gotten better looking. It was looking like crap for a while, but now it's looking better. It's still a little iffy here, so I'm not pounding my fist on this one. Watch if it does pull back. Watch to see if the 20 EMA can come into play and hold it. Linco, it's still set up okay, but if it gives away for this 50-day moving average, it basically voids this really nice push up. So it's got to hold the 50-day here. Okay, it's got to hold the 50-day here. Baba, it looks like Baba wants to go to the lows here. EC, yeah, it looks like Linco. It's holding the 50-day. If it gives way, could go back to the 2015 lows. If not, see if it can rotate up and get to 20. Costco has earnings this week, I believe. I believe I saw them when I was going through the earnings Thursday or something. I mean, again, you can't guess at this, but looks like it's in a bull flag. But again, earnings can be the wild card there. So you got to be careful. BXE, interesting stock. Definitely interesting stock. Coiled up here above the short-term moving averages, still below the 200-day overall, but if it can get above $3, it may have a little move up to the $4 area. That's a pretty nice, at a minimum, that's a pretty nice move. I mean, you got a little resistance right here, whatever this is. Let me get rid of my screen here. I mean, you do have 370 would probably be the first spot, but that's still, I mean, 70 cents on $3 is still, not terrible. All right, so BXE looks like it could be a nice one. It's a cheapie, too. Let's see what else. USO. Yeah, it looks lower to me. I mean, overall, I think oil, if this can't hold here, I think oil's going to go back down to the lows on the year. I still think oil is lower to go. My call was under $30 on this. Nobody believes me, and that's fine. I mean, I could be wrong, but I'm still thinking it has a chance there. IG looks nice. I mean, it's overbought on the short term. You see, it's just riding up this 10-day. But again, I mean, it looks really strong. So after pauses, it could be setting up for a move higher here. Leah Corporation. Watch the 20 EMA if it pulls back. It looks strong, but again, overbought. So we always want to make sure, we see it moving up in a stair-step fashion. Avid is stretched, but looking good too. After a pause or pullback, we could watch that for a potential buying opportunity. USO is like oil. It looks lower. UNG, it looks lower to me. Natural gas looks lower to me here. RSX, hold on a second. RSX is the Russia market vector. So it's consolidating here. See if it can push up from here, and if it can it make it all the way to the 200-day moving average? VIP, there it goes. We talked about this last week. It's continuing to move higher here. It's got to get through this level right here, 560s. And then if it can go to that 200-day moving average, which is coincidentally 666. Oh, no. All right, red looks okay, but it needs to get off its butt here. It's drooping a little bit. Needs to get some buying energy to come in. RSX I already did. Let's see. That's a popular one today. Okay, Guild. Yeah, I mean, keeps coiling. Boy, this is an option seller dream here. It ain't going anywhere. Staying in. But you see, the tighter it gets, the more, in my opinion, it's winding up for a move. Again, either way, it's above the moving averages, so I would lean to the upside, but you got to wait for confirmation. So Dimitri, oh wait, let's do Coke first. Yeah, it's sloppy, but it looks okay. Because above the moving averages, it's really got to clear here, though, before I can get bullish. So Dimitri asks, Tiny, how would you play NQ at these levels? It's very difficult to trade it long, even intraday at such extended levels. I hear you. I agree. The NQ is absolutely extended, and while I do think the NASDAQ will hit a new all-time high this year, I don't think it's going straight up there, which, there's risk in there. There's risk in the zigzag. Obviously, if you're positioned wrong, it is kind of a pain in the neck even to trade intraday. And if you're struggling with it, my thing is go to the TF, which has volatility, or go to the YM. I mean, or go to the S&P, if you really want to. That's the way I'm thinking. But the NQ can be a pain in the butt to trade even when the market is in a good good rhythm. And right now it's just overextended and chopping up here. But I do think it's going higher. I don't know if it's going to go straight up to those highs, and I don't think it will. It's usually not how the market works, but it is acting well. Twitter, we talked about this already, but Steve brings up a good point about short out of this channel. Yeah, I mean, it's more of a wedge, but yeah. And you want to watch the 20 EMA here to see what it's doing, to see if it comes into play there. MBLY, I mean, Mobile Y looks like it's boy, I mean, it looks a lot like BABA, right? I mean, stocks are looking a lot alike here. It just looks like it's drifting lower. I think it'll probably test the lows before it goes higher. VFC, yeah, I mean, it's pulling back now. It's extended. Look how stretched it is from the moving averages, but I think it's going to go higher. I think it's going to go higher before it goes really far low. I mean, it could go lower on the short term, but I think it has higher to go before it changes trend at least. MTN, watch the 50-day moving average as resistance. It's got to get above that. ISRG, looks, 500. Wow, what a nice whole number it pins at. Of course, we want to now box this. We can box it this way, and we can also put another line up here. So we want to see which way it releases from. I don't know if that's a spike from earnings on VRX being. I don't know. You can look, though. I don't know. All right, Paul's not here yet, so you can give me more stocks. All right, guys, that's it, please. That's it. That's it. No more, no more, no more, no more. Let me go through these now. Qualcomm, yeah, I mean, it's acting well since hitting the February low. Watch the 200-day. Overall, it's sloppy, though, so we got to keep that in mind. FXE, it still looks lower. I mean, I think the euro is going lower. I've been saying it. I think it's going to par at a minimum. EWZ, consolidating. It's not terrible looking here. You got to wait for it to release out of this one way or the other. Googleicious. I love how they added the L to it. Googleicious. So you got the 200-day that it closed above Thursday and Friday, but we ran right into this previous spike high and pushed off of it now. So you got to definitely watch that as potential. We have to get above that to see if it can keep going. I mean, this whole thing is like a topping pattern. It's really an ugly-looking head and shoulders at best. Okay. UUP. Yeah, I mean, this is the dollar, so it looks higher. I mean, if the euro looks lower, the dollar looks higher. CQQQ, what is this? A leveraged, oh, it's China Tech. Okay, I never heard of this. It's sloppy as heck, and it's right on top of the moving averages, so it's going to move one way or the other from here. I couldn't tell you which way, though. That's why we wait. See which way it goes. Level 3 looks higher. Looks like it's consolidating at the highs. Silver, I mean, it's pulling back off the 200-day moving average here, and now it's in this channel. So now we want to watch. Whoops. We want to see, hold on a second. We want to see if it can get out of this channel here. Let's grab the, boom, 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 yeah. So we'll see. I mean, right now it's on top of the moving averages, so it's going to move soon. Okay, Craft, is it CRFT? Yeah, that's it now. Okay. It's consolidating here. So what we want to do is we want to wait to see which way it goes. Can it go here or can it go there? EWD, stretched above the moving averages. See if it pulls back or not from here. Looks good. It's on a nice trajectory here. This is the Sweden fund. But a Sweden ETF, so we want to see if it consolidates here. A little tough to jump in. Reg looks lower. Reg still looks lower here. Wow. Really not acting great. LGF. Yeah. I mean, you got to put a nice little coil on it, put a nice trend lines on it. Looks like it's wedging. So you want to see which way it goes, one way or the other from here. EBIX. Yeah, nice pullback, nice hammer at the 20. See if the buying energy, the buying pressure comes back in here. And if it can go higher. Okay. Q, consolidating up here, overbought, but looks good, got momentum behind it. Here's FEYE, which we've been looking at. You could see those are old lines here. And they're consolidating, but you want to see it release. It has to release. Caterpillar. It looks lower to me. I think Caterpillar's going lower. I think gold, like silver, it's sloppy on the short term here, but you got the 20 EMA and the 50-day to see if it comes in as resistance. Let's see what it can do here. I mean, it may break down out of this before it even comes into resistance here. But if it can pop to the upside, that's fine. I mean, this is really sloppy here. You know, I don't think we get a really big move until it calms down here on the bigger picture. Then we can coil up and see where it's going to go. So Edward says, how do you trade the VIX? Well, you could trade the VIX futures. You could trade the VIX ETF or whatever this is called. What is this called? No, I forgot. Anybody have I think it could just be called VIX. I don't even know. Whoever has the symbol, let me know of it. Or you could, what I like to do, I get signals off the VIX and trade it with the SPY. But a little different because the VIX, if you could trade the VIX, you can actually trade it a little, you can actually trade it. You don't have to use a surrogate to trade it. But you could use the SPY and go, take patterns off of it based on what the VIX is doing. Yeah, Linco, we went over already. UCO, yeah, I mean, it looks lower to me. It's holding the 50-day moving average. It's just consolidating. But you never know. I mean, it could definitely perk up. You want to check where earnings are, but I mean, to me, it just looks like it's stalling here. It's stalling out. It's puttering out. And, it looks like it's going to go lower. Okay. FXEN. Yeah, it's pulling back. It's real cheap. You got the resistance off the 200-day. I just love when people say, oh, the charts don't matter. Okay, very good. And then you got the 20 EMA. Watch that as potential support. But if it can rotate from here, then that's fine. Baby. Yeah, baby. Interesting. It just grinds, and then boop, it dips below the 50-day moving average like this. I mean, you got to wait for a pattern to set up here. See if it remounts the 50-day or if that's a real break and it's going to go lower. Now, IDT, that looks like a real break, right? Broke down out of this pattern here. Watch that 50-day. When you get big expansion candles like this, I look for a consolidation the next session, which is what I'd be looking for on Monday. But I mean, you don't have to. You don't have to, but you definitely can. Let's see. Hold on one second. Okay. IDT. Okay, we're on IDT. Sorry. T. T is consolidating here. Right. See if it can get over that 200-day. And then just in time, Paul arrives. WBA, Walgreen Boots Alliance. Stretch. Definitely stretched here. Want to see if it consolidates here or pulls back, but it looks like it's got some good momentum behind it. So that's it for me. Paul is up next. And I just want to remind everybody, paulandsaul.com/like/4vids. Sign up.
Hey, dude, take another one or two. I got to grab some water.
Okay. Let's go to this. This is the Sunday night strategy session sponsor. Go to this URL. Also, if you want to be entered into a drawing for 1 hour of one-on-one coaching with yours truly, feedback to support@winningedgetrader.com. 1 entry for just feedback, 3 entries extra for a picture, 6 entries extra for a video. So you can get up to 10 entries. And we'll do a random drawing next week. We'll support@winningedgetrader.com. But please support our sponsors because it keeps the Sunday night strategy sessions free and lean. All right. So Paul's going to be back in a second. I'm going to pass it over to him when he gets here. I want to thank everybody for joining me. Was listening to VXX. Okay, let's see. So VXX is the way to look at the VIX? Yes, it is. Okay, so there's another way to trade the VIX if you want. And then you got XIV. Paul doesn't like these, so I'm not really I'm not really a big fan of these either. I tend to go to Paul when it comes to like these types of stocks or ETFs or whatever they're being called. Was listening to a gold trader saying gold is no longer a currency. The dollar is a currency. So that gold will be based on supply and demand. What about the reports of Apple buying large amounts of gold for their new phone? Would that be a play? Are they really? I didn't hear that, Scott. I just did a little Apple research today. I didn't hear about them buying a lot of gold, but maybe I missed it. I mean, I'll have to look at it. That's not a problem. You could be correct. Let me look at it, and I'll talk about it next week. Whoops. Get rid of Paul. Where is Paul?
I'm here.
Oh, I think we're both the organizer. Also, I think you're okay. Can you see the questions?
Hold on. I can.
Okay, so that's weird. All right.
How come Paul is really cute? Yep, I see the questions.
Yeah, you wish. All right. Well, I'll see everybody next week. Paul's going to take it from here. I will not.
You're not staying?
I'm going to stick around, but
No, I'm just going to make sure and everything.
Yeah, no problem. I know, because, if I don't stick around, gosh forbid.
You have nothing else to do.
I actually do, believe it or not. All right, I'll talk to everybody next week, and that's
Hey,
it.
before you go, I didn't, cause I just literally walked in from a charity event. What was on tap for the week important? Anything?
Just job numbers, ECB rate decision.
Nothing.
Yeah, well, I mean, job numbers are the big and bad one, right? I guess. And I don't really see any earnings of. I mean, Costco was reporting, not that they have any influence, but somebody asked about the Costco stock, so otherwise
Okay.
I don't really see anything. All right, I'll be
Awesome.
here if you need me.
All right, cool. Thanks. Okay, let me just do one more thing, and thank you all for your flexibility. I had this charity event that I got suckered into, so I'm almost sufficiently prepped. But I did win. One of the 6 auction items I won, or my wife and I won, was a Tony Dorsett autographed helmet. And for those of you who don't know me, I'm a huge Cowboy fan, and he was my favorite all-time Cowboy. So I was also the only one who bid on the Tony Dorsett football helmet. So that was fun.
Meanwhile, you can get them. You can get them on eBay for $5, and Paul has to put on a freaking tux to get one.
I did not wear. I wore an open shirt and a blazer. I mean, we have a half a foot of snow, so it was a small turnout. So we won. That's why we won 6 auction items. Okay, let's roll. We're going to cover the major indices first, like we always do. Then we'll cover the key sectors, then the secondary sectors, and then all the fixed income, commodities, currencies, etc. Feel free to post your questions in the box. So as we 8:40 on Sunday night, futures are up nothing. 10 bips, 14 bips, which is pretty much meaningless in my world. And the markets continue to behave really well, which I've chatted about here since the get-go, that I have been a bull, I was a bull, I am a bull, I will be a bull. I think, did I do TV last week? What did I do last week? I did I did Fox Business in the afternoon, and I did Yahoo. So there's a big piece that I created about Dow 20,000 on Yahoo. I still think the same thing. So if you're here last week and the week before, I think the markets are going to go higher on balance. They've done nothing wrong price-wise to upset the apple cart. So nothing has changed from anything I've said for the last 2 months, except maybe markets behaving a little better even than I thought, and I've been really bullish. The market acts well. Price has done nothing wrong. the internals, the AD line, up and down volume, new highs, new lows, have done nothing wrong. If you didn't know we were 72 months into a bull market, it looks like this is the middle of the bull market. Stuff's trading that well. So that's, to me, it's encouraging. And I say that because it's so much easier to make money in a bull market. And I know a lot of people love being negative and like to enjoy when other people suffer, but truth of the matter is it's much easier to make money in an up market than a down market. So as long as this continues, I think we should enjoy it. Don't fight it. The masses keep disavowing this bull market. They keep hating it. They tell you why it shouldn't be here. Bottom line it is here. It's reasonably healthy for a 72-month bull market. So that's my overall take. In the very short term, and here's what's the important thing. In the very short term, something I haven't said in an awfully long time, sentiment is at very dangerous levels. Sentiment is at very dangerous levels. And by sentiment, I mean the sentiment surveys, Investors Intelligence, AAII, RIDEX sector fund flows, put call ratios, more importantly, the amount of puts and calls being open for new trades is all skewed to the bullish side, meaning in the short term, the masses have become very, very positive on the stock market. So short term, that worries me. However, I think any pullback from what I've said for 1, 2, and 3.5 years, any and all pullbacks remain buying opportunities until proven otherwise. So I can't say I would run out and dump fresh money into on the long side of stocks right now, even if they accelerate to the upside. I think you got to be vigilant about buying pullbacks. Okay, so with that, let's cover the major indices. We'll look at all the ETFs because they have actual openings. Here's the Dow. What do I like? I like that we broke out to all-time highs. What's the first pullback? You're at it, really. That's the old highs here. So, another day or two to the downside, and you're into some okay support. Will that turn sentiment negative? I doubt it. I think you're going to need some kind of mid-single-digit decline to get the bulls, or especially the Johnny-come-latelys, off of the bandwagon. But we're overbought on the stochastic. There's no divergences. So any pullback, you got to buy. Is it going to come this week? Maybe. But I certainly would not just jump on the market to the upside here in the very short term. The S&P 500, kind of sort of the same thing. I mean, you have no divergence on the stochastic. First support off the next pullback is back in here. Remember, support is not a point. It's kind of like a mattress. You kind of sink into it. So you probably have a plus or 2% range above and below this blue line. I mean, S&P could certainly go down 3 to 5% and not do anything to upset the intermediate term structure of the bull market. Mid-cap index is clearly, price-wise, a little more extended and a little more positive. You could pull back even deeper, and it's still going to look pretty good. No divergence setting up on stochastics. And the small caps, same as the mids. They're very extended. However, no divergence, and you've got a little bit of support, 1% or so below the market, so call it 2%. Finally, NASDAQ 100 faces the Qs, still looks pretty good. Again, No meaningful divergences. Price has done nothing wrong. Price is a little extended. Sentiment kind of sucks up here. That's my only concern. The sentiment is not good. What are the scenarios? One, we could absolutely explode to the upside, a la late 99, early 2000, into what would be the final push higher to the bull market peak. I do not think that's the likely scenario. I don't think the market's ready yet to explode higher to that final peak above 20,000. Okay. We could have a pullback of mid single digits, which I think would be really healthy and welcome. Or we can have a full-fledged, 10% correction here. I mean, that's very likely. I think the most likely scenario is we either go sideways for a period of time or we have a mid-single-digit pullback. So the U.S. looks pretty fine. Here's Europe. Europe, again, is very quietly leading the way around the world. It's had a pretty good rally for the first 2 months of the year, right into the 200-day moving average where it's encountering some resistance. I think any kind of short-term pullback you get of a couple of percent just leads to another move higher above the moving average. Europe still looks okay. Emerging markets, which I've liked for a long time. What I like now is this has been a really orderly advance. Rally, pullback. Rally, consolidation, rally, pullback. We're getting, this is a very orderly rally, and I think the upside resolution is next stop, 200-day moving average, and then we're going to see if we can break out above this area right here, which I got to believe we do maybe later this quarter, early in the second quarter. Let me pause for a second, see if anybody has questions. All right, these are all tiny stuff. Let's see, what do we got? Thanks, Scott. How about them boys? Love the boys. No one is talking about, Gavin, no one's talking about a 10% pullback on TV anymore. Yeah, Gavin, it's funny. That's one sign. You're right. That's a great observation that no one's really saying stocks are due for a pullback. That's one sign that obviously they are due for a pullback. I mean, sentiment is only one. If you had a four-legged stool, sentiment would be only one leg that's important to the market, but it's an important leg. And short-term sentiment really stinks right now. Healthiest thing would be to get a nice pullback here. Even if we pause, I mean, we could go, it probably won't happen, but we could go sideways for a month or three. That'd be really healthy. You would frustrate a lot of the bulls out of the market. Could we get on 10%? I think it's possible. It's not probable. I think you'd really need something out of the blue because the stocks are still the only place to be globally. And the bulls aren't exhausted yet. CNBC has had a parade of bears saying the S&P earnings. It's funny. I've seen that story everywhere for a couple of months. S&P earnings are down, therefore the stock market must be down, which those of you guys who have any clue, that's nonsense because it could just simply be, market could simply be rising in multiple expansion. S&P earnings are stalling, but it doesn't mean stocks have to go down. All right, let's forge ahead to our three key sectors. The banks come first. Last week we talked. I said the banks were neutral. We upgraded them from crummy to neutral. If you're looking for a laggard play, yeah, but there's nothing sexy about this chart. Just absolutely not. They're okay. They're definitely not a leader. And I have too much fear to play laggards except for the energy service area. So banks to me looks dead neutral. Transports, let's go to IYT anyway. Here are the trannies. They also are neutral, but I believe this whole 3 to 4 month pattern, instead of it being a big top, I do believe this is going to lead to a huge move to the upside first half of the year. I own no, for full disclosure, I own no transports right now. I will be looking to buy them. And on the index side, which I didn't disclose, I still have my huge S&P position, my large Q position, and this week I sold some Qs and I bought some mid caps. So that's where I kind of sit in the indices. This to me looks neutral, but I think intermediate term, or even if we pull back deeper, we're going to resolve ourselves to all-time highs again in the trannies. And finally, the stocks, semis. I retain a modest position in semis that I plan to add to. And I think any pullback here is a buying opportunity for a move to all-time highs in the semis. So the three key sectors, none look crummy. Banks are neutral, trannies are neutral with upper bias, and the semis look really good. So three key sectors, no warning signs. Other tech, here's software. Software has been dynamite, done nothing wrong. Buy weakness, no worries there. Telecom, which has been one of my sector plays for the whole year, remains in a, I don't want to say the word mired, but it's in a trading range towards the upper end. I do like telecom for the whole year. It's kind of boring and stodgy, but it's one of my picks. Sorry. Diversified financials. Kind of like the banks. They're probably a drop stronger. They're fine, but I'd rather buy the stuff that's really moving out to the upside. Consumer discretionary, we talked about for a while. The consumer came off the mat. Discretionary did not have a good year last year, but looks dynamite this year. This, to me, is too extended to buy. We talked about this day right here being the time to buy. If you missed here or you missed here, I would not go throw money in up here. That makes no sense to me. You're so extended. Wait for a pullback. Wait for it to go sideways for a while. But it doesn't look like it's topping just yet. Retail, which is a subset of discretionary, still looks good too. It's not as extended, and I think it's got more all-time highs coming. And the other sector I love this year, as you know, has been the home builders. Would I buy them up here? No, I would not buy them up here, but I would buy them into weakness. So a little extended. I think you get a pullback, a little deeper pullback, and I'd be all over home builders. Okay. XLI, which is industrials, the big smokestack stocks. I think they're fine if you're looking for some conservative stuff. GE, Boeing, United Technology, that group. It's fine. Nothing wrong with it. I just would rather buy something with a little more juice to it into a pullback. Materials have been dynamite, and my research doesn't like them. They're typically not a late-stage bull market play. They're an early-stage bull market play, and I think you're playing with fire. So even though price looks pretty good into a pullback here, I'd rather buy something else than traffic and materials. XLE, energy did not have a good week, but the bottoming pattern here still looks somewhat constructive. So hard to just toss it out willy-nilly. It looks okay. OIH, which I still own, did not have a good week. Still looks like it's putting in a constructive bottoming pattern, and I have a small long. I haven't touched it. Probably should have sold it out anyway out of frustration, but I haven't. So I think this still trades constructively. It's got to stay above the lows, but maybe this pullback will build up enough negativity that we can support a rally above these last two peaks. Our defensive stuff, large cap pharma has been dynamite. It done nothing wrong. You know, buy weakness going higher. Healthcare, kind of the same thing. I am long a pretty good position in healthcare. We talked about this for a while. I love these kind of patterns. Flat tops normally lead to breakouts. So I've been long healthcare, as you know. I've been constructive here, and I think it's I'd add to it, which I will add to it actually, but I have a position anyway. Staples, I mean, they trade fine. They're definitely fundamentally expensive, and they're not leading, so I don't really have any interest in looking at the staples sector. Utilities, which we discussed, I sold. What did I sell? I've sold. I'm totally out of utilities. I sold the rest of my position a couple of days ago. I think here, and I'm totally out of utilities, which means they will probably rally this week because I sold them. But this is no longer a really bullish pattern. They kind of broke the back of the bulls in the short term. REITs, which I sold, which, as you know, I sold last week. They don't look that bad. I mean, it looks somewhat orderly, the pullback, but I think still for the time being, there's good money to be made elsewhere. So if you noticed, staples, utilities, telecom, the really defensive stuff is not leading anymore, which is, in intermediate term, very positive. It's really good that the consumer and the semis, that's what you want leading in a bull market, which still remains a bull market. So those are the sectors. Let me pause and look at any questions you guys posted. Scott, you hear no sound? Hopefully everybody's still hearing me. Yep, okay. Thank you. Yep, thanks, guys. All right, let's move on. Okay, so we covered the sectors, we covered the indices. Let's go to one of my favorites, which is the greenback. We talked about this a lot. As you know, I have been bullish since early 2008 on the dollar, and I remain bullish. My long-term target's been par, which is 100, back when we were at 76, 77. This is what I love. Sentiment was so positive on the dollar here, and all you could get was sideways movement before the bulls are coming back to work. So the easiest money has been made in the dollar, but I think it's still going to go higher. And that has all kind of long-term implications. As you know, if you watched my Yahoo Finance segment last week, one of the premises for my Dow 20,000 plus call is that we see massive capital inflows because of the dollar from Europe and from Japan. So they flee the yen, they flee the euro, they come into this country, they buy T-bills, and they eventually buy large cap stocks. And then we eventually go above 20,000. And then that eventually kills the global economy in kind of in that order over a period of time. Dollar still looks good. Not doing anything wrong. Smart money has been locked and loaded short the dollar, I think, since back in here, which to me is fascinating now. Gold. What did I do with gold? Oh, I'll get to that in a second. Okay. So gold looked like it was bottoming down in here. Stochastics really oversold. You're getting some positive candlestick behavior. This is still crummy action. You don't see any solid green bars, and you're seeing selling in late day. So gold is maybe bouncing rather than really rallying hard. Silver, nothing meaningful there either. It's oversold, but the rally is anything but impressive. GDX, I blew up my position on in my conservative strategy. I sold my position on Friday because you had a pretty good bounce from roughly 20 to 21 and change, and you had 2 days in a row of less than enthusiastic trading by the bulls. So I got out. I still own it for the intermediate term, but I won't be holding it long. Platinum, someone's going to ask about it. I mean, we didn't like it last week, and I mean, it looks like it wants to bounce, but this doesn't look hugely meaningful yet. We don't see any really strong days by the bulls. And Dr. Copper, which we talked about for a couple of weeks being long, using these lows to shoot against, had a really nice week. So what's happening now? Well, guess what? You're kind of into resistance of these two lows. So would I want to add to copper here? Absolutely not. We talked about these two lows being the spots somewhere in here to get long, but up in here I wouldn't do it because I think you're going to have trouble getting above these two lows for the time being. Let's see. What else did I miss? Let's go to the bonds. Treasury bonds, which I told you were going to rally this week because I sold a couple of weeks ago, and they did. Boom. I did buy some Treasury bonds back, so I sold out and I bought back. I think I bought back higher than I sold, which I told you I would because it'd be a stupid thing. I'd look like an idiot, which I did. I don't have strong conviction right now in the long bond market. I don't love the depth of this decline. I don't love the candlestick action. And TLT, which is similar, this to me looks like just a bounce. It does not look like this is the beginning of a rally back to the new highs. Could I be proven wrong? Sure. I did buy some back because my mechanical system gave a buy signal, but I'm not really enthusiastic right here. Ten-year yield. Again, it looks like you had a nice bullish engulfing pattern. Not a great day on Friday, but it looks like it wants to move higher. My range for the year, as I mentioned many times, 230 on the upside and 150 on the downside. It looks like maybe we want to bounce a little bit in yield temporarily, which will stop me out of my bonds again, and I won't be happy about it. Let me check for questions. None. Okay. Let's go to other bond chart. So here's my high yield chart. One of my 3 high yield positions I own, PIMCO High Yield Fund. I mean, I said last week I'm shocked at the magnitude of this rally. This has been an unbelievable vertical rally in just 2 months. So I'm happy that I got part of it, but this has really been mammoth. A little bit of a head scratcher. Caught a lot of people by surprise. I think I also own this fund. I do. ABHIX. Not yet to all-time highs, but I think it gets there soon. So high yield's looking pretty good. JNK, which I still own a huge position in, certainly extended. I mean, this is a ridiculous rally. You don't see this many times. So risk has increased as the days have gone on because you've had no pullback. Eventually, it will turn. I will get stopped out with a pretty good profit, but right now I'm sitting back and enjoying it. So at some point, it will back up, go down, whatever it is, 0.5%, a full percent. I'll get stopped out, take my profit, and walk away for a little while. But bull markets do not end with high yield trading this well. They simply do not end with high yield trading this well. Additionally, New York Stock Exchange advanced decline line, another all-time high. Bull markets never. Okay. And currencies, we do the dollar. And the euro, once again, broke down. It's going to reach my target of par or 100 a lot sooner than I thought, but it's on the way to 100 FXE. It's 100 or bust for the short term, maybe intermediate term. Just behaves crummy. The yen, I think, is getting ready to roll over again. Again, nothing has changed from any comment I made for the last 4 years. I think you got another 50% decline to happen in the yen. I mean, this whole thing looks like just a consolidation, and then another leg down is coming in the end. Let's see. What else did I miss? We didn't do crude oil. Crude doesn't look as good as the energy stocks, XLE. They're off the mat a little bit. But crude oil itself, this is not wonderful action. It's best case neutral action. UGA, which is home heating oil, is traded great, which I've had a position in. When did I buy this? It's been, as you know, it's been a loser. So I bought it up in here. All right, I'm up in here in 45-ish area. So I'm still a loser. But it's bounced really nicely. If we get any more surge to close this gap, I will, oh my God, lick my wounds and run away. Let's see what else. What did I miss? Any questions, comments? Gavin, what country ETFs do you like? Oh, I didn't cover. Gavin, I don't have a single country I like the best. We can cover a couple of them. If I can type properly. Here's Japan, which I've been bullish on for several years. It's hard to buy it up here. You know, you're breaking out, but for me, it's hard to buy it way up here. I wait for a pullback. I do like Japan. DXJ, which is the currency hedge Japan, I like as well. They both look fine. On the emerging market side, which I mention every week, I remain long FXY, China. I haven't touched it. It's a huge position in my emerging market portfolio. I think it's going higher. I remain long EPHE, Philippines. A little bit more extended, but I do own it, and I'm hopefully not going to sell it this week. And I bought back EPI early last week, which is China, which is India, and I think this one bust out to the upside again. Thailand, which I had been looking at for a while, fell off my hit parade list. I have no opinion on this anymore. Somebody loves Russia. I forgot who it is. I just have a tough time buying Russia here because it's had such a big bounce. So you're probably halfway between the bottom and what I perceive to be the top. So I wouldn't go near Russia. Brazil, one of you guys likes, I don't know, maybe it's bottoming, but I think you got time to buy Brazil. So I mentioned the emerging markets ones that I like, and I think the better European countries in the weakness. Here's Germany, looks fine. A lot of European countries look fine to own into weakness, any kind of pullback. Swanson loves RSX. He can love it. That's more power to him. I just don't see it $18. If my upside is 21 and the downside is 12, I don't like the risk-reward ratio. The time to buy it was here. Their bell rang. And look what happened this day. Okay? Awful, awful. Oh, my God, the world is panicking. You get a bullish candlestick reversal. You had record volume. That's the day to buy Russia. It's not here. Sorry. But I do like Mike Swanson anyway. Oh, Natty Gas. Johanna, I have no idea what uranium symbol is. Isn't uranium what Superman can't? Uranium? What is Superman that kills Superman? Is it uranium? Kryptonite. That's right, kryptonite. Sorry, I don't know what I don't know what symbol uranium.
I didn't even want to dignify that with a response, but it's okay. I don't know the uranium symbol either. Before you ask,
let me look at natural gas. Natty Gas. I have said for several weeks that you can't short it down here, but there's nothing constructive on the long side. I think it's one of those securities where you just sit and watch and wait for some kind of setup. But I don't like it in either direction, unless you do, Tiny, short or long. I don't.
lower.
Tiny likes it lower. I have no arguments.
No, the only thing is that the super guru thinks it's going to $1.50, so, that means it could squeeze at any time. But otherwise, yeah.
Oh, this is palladium. No, it swaps for uranium. Oh, before I forget, I'm going to be on Fox Business tomorrow night, as long as the snow stops when I get to the city. So I'll be on Fox Business between 6 and 7 on the Charles Payne Show. So if you're bored, watch it, or if you're not bored, DVR it. And if you watch it and you use Twitter, tweet during the show, because we do have fun answering the tweets. And I'm also going to go buy another suit because I'm so fat and disgusting. I can't all my except for my brand new suit that I had made last year. I can't fit in any suits. So I need to buy another suit tomorrow in the city. All right. Any other questions, comments, concerns, quibbles, anything? Commodities. All right, Scott. I'll do this before I have to get another cocktail. Here's wheat. Ooh, I didn't look at this last week. Thank you, Scott. So let me say this. I like wheat. Wheat certainly warrants alongside trade, in my opinion. You're going to have a divergence setting up. Positive divergence, looks like, kind of. I do like wheat to the long side. I do like wheat to the long side. If it closes below last week's low, get out. But wheat looks good for long side trade. Corn, I don't know. I'd lean long on corn, but I don't think I like it as much as wheat. And beans, they've been in this trading range for a long time. It's building a really nice flat top. I wouldn't be shorted, I'll tell you that. I would not be shorted. I'd lean long on beans as well. Cotton, I have no opinion. I remember looking at this last week. No opinion on cotton at all. You have a divergence here, but I don't love it. Cocoa, no opinion. These 2 days are too wild volatility-wise. I'd probably step aside and just wait on cocoa. Coffee looks dreadful. You could short any bounce unless it puts in a significant bottoming pattern, but coffee looks awful. And here, this has looked awful for some time. This was the glimmer of hope. Bullish engulfing at the 150-day moving average, no, at the 350-day moving average. A little bounce, and then it's rolling over again. Dreadful. So that's it for Johanna. What group? I don't even know what symbol to pull up for rare earth. If you have one, let me know, and I'll pull it up. So as I'm waiting, or as we're wrapping up, after I refereed a swim, that's what you asked me. I don't know any symbol. Tiny may know. After I refereed a swim meet yesterday, I took my daughter to a basketball game, and I picked up a pizza on the way to pick up my little son, who went to the UConn game with my brother and his kids. And I was so hungry, I picked the pizza up, I brought it in the car as I was waiting for my son to come to the parking lot. I opened it up. I did not see the cheese was still like boiling a little bit or bubbling. And I tried to wolf down a piece of pizza, and as I chomped down on it, that bubbling cheese stuck to the roof of my mouth, obviously burning me. And so now I've got all that skin hanging off the top of my mouth, and it's all swollen and kind of gross. It hurts like a...
Yeah, I do that. I used to do that all the time. I don't do it anymore. The only rare earth I know is the rock group. I have no idea. I'm serious. I don't know the stock group.
Digital marketer wants
Well, I don't know what it is, but I can. The only thing is the song.
So Johanna, on support for coffee, if you just look at the chart, you'd probably say support is way down here. I think you're going to bounce before you get all the way down to here. Sometimes when the decline is that big, you'll find support in the middle of nowhere. Happens in stocks all the time. So I think you got to wait for either a divergence. I'd probably wait for a divergence with a candlestick reversal if you wanted to give coffee a shot to the downside. If you wanted to short it, I'd wait for a bounce back into resistance here before I get shorted. REMX. Thanks, Peter. There we go. Peter, nice going. Good pull. Market. Oh, this is Van X ETF. Wow, it trades by appointment only. This ETF traded 10,000 shares Friday. Wow. My has the bloom fallen off the rose from 120 to 27, and now no one's trading it. I mean, I haven't done any research fundamentally. On a chart, you would say it looks like it's trying to bottom, is all I could say. But you're already overbought. If the bottom was reached here, this overbought should be just a pause, and then we should continue to rally significantly higher. But I haven't done enough research to give an opinion, or else I would. This is a dead ETF. It is amazing, when the ETF purveyors launch an ETF, and so many of them never get any traction. The underlying securities may trade a lot of volume, but the ETF does not. Like they used to have FAA for the airlines. And guess what? It's gone already because nobody traded it. You get a lot of ETFs that make sense and they should trade, but nobody cares, so they go to ETF heaven. Okay, last call. Going once. Go CLRENZ. Those are probably tiny stuff. Yeah, I'm gonna let Tiny comment on these if he wants to when I'm done. Any other questions, comments, concerns? The market, each sectors, commodities, fixed. What color tie I'm going to wear tomorrow on TV? Scott, I'm not sure. Scott, is there a New Zealand ETF? You know, EWA is Australia. Is there a New Zealand ETF? ENZL. Let's see. Scott, you get the prize. ENZL. So in the short term, it doesn't act bad. This is not awful action. What I don't like is you got 3 days in a row where the ETF went higher and they closed towards the middle or bottom end of the range. I hate trading like that. I like when we close top end of the range, which we did not last couple of days. So I don't know. I think ultimately this resolves higher. But I can't say I have a strong opinion on it right now. I don't like the action the last 3 days. Anything else before we call it an evening? Scott, how do you find me on Yahoo? I think it's on my website. Let's see if Laura posted it yet. It's not up yet. All right, so if you want to see my Yahoo site, I thought it was pretty good. I really enjoyed that. I think you go to finance.yahoo.com. And there it is, February 26th. So if you want to see the segment, finance.yahoo.com, and click on Dow 20,000. Here we come. This market's going higher. Could you go to coffee one more time and look at the 2014 first? Yep. Let's go to early 14. Oh, shoot. There we go. Yeah, I said this earlier. When you get these dramatic declines, once you reach the first and second support, they usually don't go all the way back to the real support on a chart before they bottom. So I would be surprised if coffee collapses all the way back down to here before bottoming. I think it's going to bottom somewhere between here and here. Somewhere in here, you'll see a divergence maybe set up on stochastics, and you'll see a really good candlestick reversal on the chart. No, I mean the other high point, Paul. Which other high point? Here? Here, with this magnitude decline, I guess you could bottom here. I just don't have a strong opinion, and I don't think there's enough evidence. There's no setup to warrant any action right now. I think you stand back and you watch it for a while. So I see what your comment is here. I think, at least for my money, I wouldn't go near this. Too many other things to trade right now. Someone traded 5,000 puts before Friday's close on NRZ. That would mean I have to remember what NRZ was. Oh, a REIT. I don't know what the news was to warrant this move from 13 all the way to 1550 in a week. I am just surmising and guessing from my own experience that this is some kind of hedging activity because it went so vertical so quickly. Take advantage of implied volatility blowing out. That's my guess. Rich. Oh, merger. There you go. Okay. So then I would feel really strongly that the 5,000 puts that March 15 puts it traded was definitely arbitrage related. It is not directionally related. It's because of the merger. And I wouldn't look too much into it because you don't know what position was traded against. But I would feel really strongly this is not anything to trade off of, rather just somebody hedging up their exposure. Okay, last call before we call it a night. And I go for a bourbon. All righty. So don't forget to watch Fox Business tomorrow night, 6 to 7. I don't know. I think that's it. Tiny, you have anything?
No, just go to that link I put up and watch those videos. Send feedback to support@winningedgetrader.com. And look for Paul on TV tomorrow. Look for Paul's ebook, Paul's insert into the ebook coming out, which we'll send 1 million links on too. And that's it. We'll see everybody next week.
Have a great week. Adios.